Welcome back to Commercial Finance and Experts Academy. My name is Suet Trun. Today I'd like to speak to you about in regards to approaching lenders and understanding what you're facing when you proceed with your investment, purchase, or project financing, as well as refinancing. So when you go to approach any lenders nowadays, on the residential side, there's a slew, an army of mortgage specialists to help you with financing. But on the commercial side, they have a very limited amount of people, mainly due to the expertise that's required to understand commercial financing, how to read financials, how to make sense of all the different types of leases and the moving parts that are required. There's so many people involved in the types of project or types of product you're trying to finance, whether it's mixed use, residential office, or a specific industry like agricultural farming, right? So it requires such a specialized niche knowledge that not too many lenders have the amount of resources, meaning manpower or woman power, to help you package these for financing. Now, the limited resources is just one thing. The amount of people that are specialized in it is also even less in each branch that you might want to go approach. Whatever banks you're trying to talk with right now, there's a very small types of people that are available in each category, in each industry. Specifically, for example, farm. There's only a very small out of a handful of commercial account manager that understands about farm financing, and similar with construction financing, right? So even the guy who does construction financing, he'd be really good at it, he'd be inadequate when it comes to farm financing. And same thing with mixed use property. It's tough because the number that they have to use to calculate to debt service is quite different. It's separated because expenses are different on the residential component versus the commercial component, right? So for you to understand when you reach lenders, understand that they have a limited amount of resources available, all right? All right. Also understand what restrictions they have. In a lot of the banks that I've approached, some of them are industry specific, meaning they may be really good at construction financing, but they are really, really bad when it comes to farm financing, right? So if you have a certain type of property, whether it's farm, or type of property versus construction, the one lender that's really good at farm financing would be brutal at construction financing, and vice versa. They are not into these types of financing to cover everything like a wide net as a fisherman would do, throw out the net to cover the whole entire industry. They don't do that. And that's the reason why some lenders flourish while others do poorly in the downturn in the economy. That's the other one thing, right? So if you know which lender it is, great, then you approach the correct lender, then you get the financing much better. And you have way better terms and conditions as well. And the other one that you might want to be concerned with is the restrictions, right? Now, they don't tell you upfront about it because they all want as much business as possible. So if your client comes directly to them, they say, yeah, we can do it. But then later on, when they provide the discussion letter, there's a whole bunch of restrictions in there that says you can't do this, can't do that, and because of this, we have to lower your loan amount. Yeah, initially we tell you we can do it 75, 80%, whatever, right? But now that you spend so much time investing with them, they come back to tell you, we can only do this much now instead of what we told you originally because of this, right? The excuses pile up. So now you ran out of time, you have to stick with them and then try to find more money for down payment, as well as area or geographical area. So locations might be an issue when it comes to financing. So knowing this, same as residential side, you have to understand how much they will finance in these certain areas. Yes, most of them will do 50%. Actually, all of them will do 50%. But how much of them will go to 65, 75, or 80 for that matter, right? You have to understand what the restrictions that they have in their financing. Like credit unions won't go out of province. We all know that. And that's the one thing you may want to look at is the differences may impact your loan packaging and how much money you get. The loan to value, the maximum amount of loan you can get is based on the restrictions, right? If you understand all the lender's restrictions, then great, then you have a better idea of what you can and cannot get. The other thing that you might be really, really cautious on is that all lenders would try to throw everything into the discussion letter in requirement. So the requirements can be huge, and most clients would never even read it exactly to understand 100% clearly what all these minor requirements are that may impact the final loan approval. I mean, the funny thing is that all the lenders offer at the beginning is just a discussion letter. So the one thing that they would offer you at the beginning, or as a client, is an LOI. They call it a letter of interest or discussion letter. Right, better. Right? So a discussion letter on LOI is really like a pre-approval on the residential side. It has so much requirement to satisfy before they give you final commitment. So once that's done, then they give the deposit. They call it the oh my god, I'll get to it in a minute. Then you get the commitment letter. Right? The commitment letter is the one that actually outlines everything. All the conditions has been satisfied. It's funny, they call it commitment letter, but it's actually they're committing to the loan now. Now that all these most of these items has been satisfied, and they're okay with to proceed forward with the loan, right? The deposit they give is the good faith deposit is what they call it, right? That counts with a good faith deposit at this time, right? Most lenders would want that at the beginning, under the discussion letter or when they issue the letter of interest (LOI), right? But being a mortgage broker that has a relationship with other commercial account manager, I'm able to bypass that and save that client's little issue at the beginning to make sure that the lender is able to commit before I give them any deposit, right? So that's an added bonus for a lot of lenders. For the clients out there, and most people don't know this, right? So knowing what you know here today, hopefully that would help you with your financing when you're moving forward. When you deal with all these types of lenders, you need to know these things, right? Through my course, I save a little bit of people's time, but commercial account managers have already told me what they like, what they don't like, and I've already given all of my clients, as well as all of the students that come to my workshop, what these are, right? So hopefully you learned something new today. You like it, click comment and like below, and if you have any questions, just write in the comment or just email sue@sharingbanksecrets.com. Take care. See you in the next video.